recording. Okay. So yeah, just as an introduction, Greg has been a member of the Mojaloop community for a very long time, and has in recent years been focused on fraud, its detection and isolation, I suppose you might call it. And I wanted Greg to present today to bring us all up to date on FRMS, what its capabilities are, what its limitations are, and what other tools might be brought to bear in complementary to FRMS in a Mojaloop deployment, or indeed wider. So over to you, Greg.
Sounds good. So we're going to talk a little bit about, we're going to go through the overview, but we're mostly going to talk. Let me get the summary up just a second. There we go. All right. Get that. Okay. Let's see. Share this. Oops. Okay, can everyone see the slides?
Yes, we can.
Yeah,
All right.
sorry. I'd forgotten to put myself on mute.
No worries. All right. So notice these slides still say Ikuda, right? I announced that was our name last time, and we discovered something rather embarrassing. There was someone hired to come up with our name, and we're about to come out and actually announce ourselves at the end of the month. But I had pre-announced to everybody at Mojaloop that our name was Ikuda. Turns out that MasterCard has a product set called Ekata, E-K-A-T-A. I have no idea how the organization that was hired to come up with the names missed that, but they did miss it. And instead, we're going to be called Tazama, T-A-Z-A-M-A, which is Swahili. It basically means watch, or kind of oversee. So what we have made is a tool that basically observes, well, it's event-driven. It's an event-driven system. I'll skip the Greg and Justice stuff, and we'll stick with this. So one of the things we're focusing on is a bit different, right? And I'll start here is we're focusing on fraud, right? So fraud, you always have fraud. Fraud exists no matter what. At some point in time, people want to get rid of their money, and at that point, it's called money laundering, right? And most of the systems that exist that you'll find out there are basically analytical. They'll do reports. They do various reports to come up with groups of people that are getting rid of money together, that are if you will, muling that money. We call that muling. So a bunch of people put money to different sources, and the mules will push the money and make it real, or make it clean, I should say.
Yeah. It's really important that the community understands these distinctions, I think. There's a lot of confusion between the two, so I'm really wanting us to emphasize that today.
Yeah, that's the that really is the big difference. And a lot of the systems that are out there have that. We decided, just like you decided, to focus on doing payments differently for a variety of reasons from the level one principle. We are focused on just the fraud aspect of things, right? So how do we actually stop the fraud? Because the level one principle said, take fraud out of the systems that we instill trust, right? And that's what we're about. So we do not focus on the anti-money laundering. We do utilize that a lot in our algorithms, our topologies, and things like that. But that's not our primary focus. Our primary focus is to be able to catch the fraud and actually stop a transaction in flight, so that we can block it, and fraud therefore doesn't exist. So if you look at a whole system, you've got the KYC aspect, which is to know your customer. So that's in theory, that so that is that you understand what they're supposed to be doing, what they're supposed to be trying. And you've got the sanction screening, which is required by law that you're going to be doing. Um, and the sanction screening is just that. It's basically checking against the list of sanctions, right? And then you've got what everybody's trying to do, which is the UBO, the Uniformed Business Ownership, who actually owns the organization, and that's part of the KYC. And then you've got AML, and you've got the part that no one was doing, or actually large organizations do this, but it's very, very expensive. It starts at around $1 million, and that's what we do. The actual real-time transactions. So what I'd like to focus on is what we do in that regard, and how we do it. And I'll take you through that real quick. So first off, an estimated 293 million scam reports were filed. All right. So last year we lost $55.3 billion, right? That was just scams, right? One payment against the cyber system could cost the world 3.5 trillion. So this is important stuff that we're working with. So it's very, very, very expensive. If you just did the analytics portion, right? So like, for example, there's been a lot of talk with FNA lately by people in the organization. They are basically analytics. They are after the fact, even though they're super fast, right? They're real fast. They're accumulating data in real time. It's still after the fact. So in this case, that 3.5 million would be gone because of the fact that the fraud has already occurred, right? And what we're doing is catching that in advance. We would actually reduce that number, right? Not catch them after the fact. That's a lot going on as far as fraud's concerned.
Yeah.
So,
And the important point here is that fraud detection and interception is whilst the transaction is still going on, and AML is post-transaction, so identifying what's happened after the fact, as it were. So they are two very different things. And KYC is pre-transaction. So there's almost three phases to this.
right. So I don't want to take anything away from that, from the systems that mainly work after the fact or work on AML. They're very
Each has
important.
its role.
Yeah, each has its role. I'm not trying to talk ill of it at all. It's very important for the organization and the regulators to find those consortiums, those groups of people that work together to move the money, and then call the police, if you will, and take them out of the system. But unfortunately for us, the people are damaged. Isn't like a credit card where you're going to get credit and they'll give it back to you and say, "Oh, that was fraudulent. We'll kill this transaction and pay you back." Now, that doesn't happen with fraud. So it doesn't happen with phishing. Doesn't happen with anything like that. The UK is experimenting with, and it's passed a law that says you will actually get paid back, but that's the UK, and they're having lots of trouble with it, and they're working it out. It's brand new. So between industry, the banking associations, and everybody else, they're trying to get through this. And I don't know about you, Paul, but are you even seeing this yet? Stuff like
No,
that with the fraud.
seeing what with fraud?
In the UK, where they actually pay back, are they announcing
Yeah,
that to folks such as yourself and things
yeah,
like that?
yeah. I'm dubious about all of that, to be honest with you.
Just to give some insight, the payment service regulator issued it just over a year ago, making
Yeah,
both parties liable 50/50. But so far, there are some companies that aren't quite paying out. They're still holding the scam victim liable. There's a lot of pressure. It's the largest financial crime in the UK at the moment.
yeah.
So a lot of activity happening in that space. But
The,
it's now starting to be that modern slaves are being used to commit the crimes. So it's actually getting a little bit more worrying. It's getting too organized.
yeah, and
Yeah,
it's different because the conventional payments fraud was always covered by the high cost of card transactions. It's essentially that's 2% merchant service charge ultimately went to, at least in part, covering those fraud costs. And we all got used to that. And then with push payment fraud, of course, there is no such cover. Um, for the first time, the financial institutions see themselves actually being responsible for the security of transactions, whereas previously they weren't. They just outsourced it to Visa and MasterCard. And we still haven't, I think, reached any form of maturity around that. Um, and the idea of a push payment actually needing a scheme in the same way as a pull payment does. I think that we'll get there, but we're probably at least 5 years off that.
yeah, it's a very good example. I would say that too. We're probably, 3 years we'll start to see people announcing it's probably 5 years before we get there. At that point in time, it's okay to just have an AML system, but that's 5 years from now.
Yeah, 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 exactly. And even then, you still need sophisticated fraud detection and intervention, just
Yeah.
as Visa and MasterCard do, because you've got to minimize those losses one way or another.
Yeah. So basically, if you take a look at Visa or MasterCard, they've got systems that, quite frankly, last time I checked, they could run 60,000 transactions a second. That's real
Yep,
time,
yep,
right?
that's worldwide though.
Yeah, and that also costs probably about $20 million to have. So
But
what that
even they, at times of peak transactions, they turn those off because
yeah,
they cannot keep up with the transaction volumes at peak times.
correct, correct.
Yeah,
And the idea is just to catch a portion, just to get that back. So
yeah,
if you're a CEO, you have a level of loss that you can take, right?
yeah, yeah,
And your mission is to keep that loss amount low,
yeah,
not eliminate it, but keep it low. And
yeah,
so that's
exactly.
that's for, and that's the same thing at a MasterCard. So if you think about what we are, we're like that MasterCard, except we're for push fraud and things like that. We're for application fraud. We're for all that. Now, what we've built is a good system that does detection and things like that. But we had to build it open source. We had to build it so it was easy to scale up and down in real time. That it was real time, and that obviously it was on the transaction monitoring side. So we monitored every transaction before it became real. That was basically our goal. All right. So what we wound up with was a system that has a payment platform adapter that sits in it here at as far as in front of the system, between basically you and the system at the payment switch, or at the switch through BPA adapter. So this is direct. So basically, we transparently place ourselves in the system, but we listen to each transaction that occurs between the system, and that's our goal. We're event driven. It's kind of like, I know you guys are used to Kafka. It's very much like Kafka. We went another way for a variety of reasons, mostly for management. We wanted to create a system that was very easy to manage. You guys pretty much have somebody that's responsible for the payment system and really knows what's going on. We are always going to be over the top, if you will. We're always going to be an add-on. So yes, we do develop for Mojaloop first, and that's our priority. But we also develop for every payment system out there. If you take a look at the deals that we've got going on right now, we've got BCAO, which is in Western Africa. That's 8 countries. They are they looked at Mojaloop, but they did their own things. They actually built their own switch, so we had to customize with that. They are ISO 20022. If we look at the people that are in the system, they're all that. But each and every person uses it, differently, if you will. So we had to allow for that flexibility, and that flexibility is in the PP adapter, in the payment adapter. It basically translates the events. So what it does 2 things. It listens to the events, and then it translates the event to our format, and then it goes through the system where we determine that the transaction is either good or bad, and we feed that back to you. So we give out an alert in the form of a JSON document. That then would go to your case management system, and you can actually, out of that alert, you can also, there's a process that will stop a transaction as well. So we'll give that alert, if you will, back to that flow or that API, and let you stop the transaction on the fly. So we can do all that, but we've got people that like BCAO that actually want to do more. And this is, I think, interesting. And what we're going to come out with this year. We're not quite sure how we're going to do it yet. But Secretary General Sec, who is responsible for this at BCAO, said, can't we do an automation here? Right now we're kind of blindly, handing this off to a case management system. Yeah, we are. That's traditionally how it's done. He says, can't we also hand this off to an automation system of some type? So we're actually looking at putting like a decision support system here, and that system is going to then work on your classification. Are you a merchant? Are you not? And then it's going to do a risk-based assessment. So, for example, let's say I did a transaction that is 20% higher than normal, right? They would take a look we'd look at your history, we look at the transaction, we discovered it's an anomaly, we determined that if it's all the requirements, but we're going to automate that transaction. We're going to say it's 20% higher and we think it's you, right? We're pretty sure it's you. So we go through that engine, and that engine is going to say, yes, it's a merchant. Yes, the allowable amount that I have set for the organization or for this organization is 20% higher. And we're going to let this transaction go through if you could do an additional 2-factor authentication. So we actually, instead of stopping the transaction, we're giving you a chance to complete the transaction, and we do 2-factor authentication. Now let's do the whole thing again, and we get an alert that comes out, but we're at 25%. 25% is not allowable for 2-factor authentication, so we are going to hit you with 2-factor authentication and liveness detection. Right. 30%, the transaction happens again. This time it's 30%. At 30%, we say no. We're going to actually just kill the transaction. We're going to block it, and we're not going to allow it to go through. So you will wind up with varying levels. This, I thought, was a great idea. We're actually going to make this part of the product. And for people who want that, that's going to be available. But to be honest, we've got to hire some AI folks to get that going. So that we do have a lot of things that we've got coming out that will really help within an environment. That should be one that's done by the end of the year. And various sources have been interested in that. All right, so a little bit about us again. Like I mentioned, we're real time. Now, if you look at again, I'll pick on them without picking on them. I'm not trying to say anything's wrong with what they're doing. If you look at FNA, I know a lot of you have been talking to them. They are real time, right? But they claim they're real time. They are real time, but it's not our kind of real time. Our kind of real time starts, at 2,000 transactions a second. We were above that number. And their real time is that just in real time, they're taking the data in as fast as you can give it to them, and they're working on it. The other option is batch mode, right? Where we do things in batches. We wait till the data shows up like every 20 minutes, and we run or something like that. Typically we see that more with the analytics. It's not usually real time like these guys are, but they are taking that data in as soon as it comes and going with it. So we need to understand that difference, that real time in our case actually means we are in the transaction. So we actually make that determination before the transaction's over.
And the
And
key difference there being that you can intercept and stop the transaction.
correct. I know at one point in time, Miller had said that Mojaloop wasn't going to interdict. Well, that's great, but we have to. We need that
Agreed.
capability. So we can either observe or we can do the interdiction. But yeah, that's a big difference between us and that system, or in what other people call real time. There are a lot of products out there that will use the word real time. The first thing you should always do is try to figure out what that means, right? So is it our kind of real time, or is it their kind of real time? There's a major difference. So if they're not talking like thousands of transactions a second, in our case, it's a full financial transaction, so it's not even a regular transaction. If they're not, talking something like that, then they're not talking in real time like we are. And so I think we're at 2,300 right now. Our goal is 3,000. If you look at M-Pesa peaks at 3,600 right now. It's the biggest system on the continent. We're more than big enough to handle any system on the continent and to handle the levels. We're not going to take over M-Pesa for them. So we're fast enough. But our goal is to get a little bit faster, and our goal is to get faster and still be open source, or still be a stack that you can work without having to pay money for that. All right. We are rules based. There's a decision around why we became rules based versus AI based. The regulators don't like AI when you don't have an answer. So they're interested in explainable AI. All right. And if you take a look, the rules and the regulations, they're really unclear on this. So it says must be explainable AI or should be explainable AI. What does that mean, right? That's not a fully baked term yet. You kind of have an idea what it means, explainable AI, over years, and since we started this, a good 4 years ago. Since we started, explainable AI has become better, but explainable AI is still, this is the process we went through, and then boom, we hit this black box that just gave us an answer back. That's not good enough. That just an answer back is not good enough. So we came.
I think that's a really important point that people often don't understand. And of course, the issue is that if you go around blocking transactions without being able to highlight a reason, you potentially give a reason. You potentially open yourself to legal action. So you have to be able to say it violated rules 27, 31, whatever it might be. And that is then a defensible position. But simply to say the machine learning algorithm said it is not good enough. And people need to understand that.
Right. That's the biggest difference between like us and them. So if you take a look at all our rules, I guess if we wanted to automate the system, you could go in and you could replace the decision-making process with an AI. We still have our rules based, that rule 37 is the one that fired or whatever. But you have to explain how you came to that decision. And what way to do that with the AI is that I personally think we could probably do each rule as random forest, and then we could do one big random forest that we feed up to. It'd be very similar to how we work right now. And just as a Classy does, that is more, it's kind of advanced. It's more, it takes the individual rules. So like we've got 3 or 4 rules that we picked that make up the topology or the design, right? And those 3 or 4 rules then are summed up and they become the topology. and that sum is then written to. So what it or decision is made based on how those acted together, right? So we've made it very simple that it's just a matter it's a sum of rules, that are pulled into an individual typology. In that case, we can also have rules fire once and serve many different topologies in the way that we do it. So rather than duplicate that, we run it once. It's one of the ways we get efficiency in the system. So it is rule based. We can actually tell you exactly what happened and why a decision was made. All this is configurable, and it's all API driven. Internally, we use gRPC. Externally, we are just a REST API. So the question that always comes out is, why didn't you make this as an AI? I think we just did a good job of explaining it. Not only is the regulator not ready yet, but to be honest, this is about making a simple tool that can be used in the marketplace. Some markets that we touch will not be less sophisticated compared to others, and so we kind of went with a relatively simple model. So everything about this works in a simple way. The idea, which is why we chose not to do Kafka, for example. Kafka really required someone that knows Kafka to tune that. But we wanted something that you could put in place and start calibrating and go. And that's where we're sitting at. We did, however, make this all with AI in mind. You may want to actually run an AI channel as far as you may determine with an AI because of quickness or because of whatever that fraud occurred. And now we back it up with a rules-based model and explain. So hey, we think we found fraud, but I'm going to back that up with a regular one. That's a totally different way of running, but we can do that. Now, the other thing that we do is all these data points feed into the calibration model. So how do we calibrate the environment? Justice has written a white paper on that. I'm here to tell you that right now, this is just really hard to do manually. And so this is an area where we need some work, and we're going to automate this process. We've actually hired some folks to work on this. I'm getting quotes anyway. But the calibration, basically individual rules have to be calibrated, individual typologies have to be calibrated for your environment. For that reason, although we do give you a list of all the rules and typologies, your decisions on what you run and when you run it, are yours, right? So your environment's going to be different. You're going to calibrate different. Every single system is going to look different as far as how it runs. The calibrations are not going to be right. So we've got calibrations in place that go kind of middle of the road, and they do detect stuff, but you've got a combination of things like false positives and a variety of other stuff that has to occur as you tune that environment. And right now, the human is way too involved in that process. If you will, we set up the environment just with 30 typologies and 30 some, I think 35 rules. So that's at a minimum 30 times 30. You have to go through that many scenarios, but it's not. It's actually a factorial. So it's how many possible derivations of those rules in each given topology can work together to come up with B maximum for you. And if you think about it, the way this works then is calibration is going to be to actually run the system for a while, collect the data, get them in, get a max, right, per rule, right, and then take the anomalies out or take the exceptions out, then run an AI to do a fit. So if you're using rule 1, 3, and 5, what's the maximum tuning to get you the maximum amount of catches, if you will, for the item, with the least amount of false positives. So we have to kind of adjust that up or down. Right now, yes, you can modify that. Yes, you can deal with that. But right now, the human really needs to know their environment, and that's what we're going to take out of this. So we are working on the calibration, and then the next step will be to do calibration in real time. So the system actually adjusts itself on the fly. But we're not going to go there this year. We'll do that next year. All right.
Greg, before you go on, you mentioned a white paper. Is that something you can share with this group?
Yeah, we could do that. So there is a white paper on calibration. We're coming out with first off, I should say we go live at the end of the month, and I've been working on the website, so we will be putting everything out there on the web. The website should be considered kind of an MVP. It's definitely not where it's going to be in the long run, but it will have the minimum of all your documentation. Focused on the documentation that's correct, because remember, we've been a work in progress, so we've been in stealth mode. We've got a lot of documentation that's old from different versions and things like that. You are not going to have that going forward. You're going to have documentation that's actually right. And that's the documentation is actually going to be maintained on a GitHub, so that won't be a special version or anything like that. And we intend to, very similar to what you guys have with blogs and things like that. We will get there where we've got blogs, but basically, coming out will be a little bit about the product, kind of the marketing definition, if you will. And then here's our GitHub and here's our documentation. So with that as well, we'll point to the white papers and we'll be able to download. But yeah, we'll make a note and we'll send that calibration doc out.
Okay, cool. Thank you. If you can share the link with me or with anyone else, then I can happily share it with this group.
All right. We'll get Justice to work on that shortly. So the way the product works is we have the PPA adapter. With an adapter, we can adjust to just about anything, and have had to do so. So we've got, for example, we've got the benefit of working with JOPAC, which is the clearinghouse in Jordan. They're kind of our alpha users, if you will. These folks tell us what's good about the system, what's wrong. The other one is Banks of Africa. They're both using ISO 200.2.2, but they both use it differently. They both act on the messages differently. So that is done in the PPA adapter to then give us kind of that flat amount of data that goes through the system and goes through the TMS API and so on. The other one that we've got that is doing ISO 200.2.2 at the moment is BCAO, and they do it yet differently again. So this is something that Paul, I really think you guys got to focus on. Is yes, everybody's using this. Yes, it's a way better standard than 8583, which is kind of standard that wasn't a standard, in that everybody interpreted their own way. But we're still seeing an interpretation that's its own. So the operators that are installing this system are still going to wind up probably customizing this, as far as when people work with that level. For example, you've got, for transparency, you've got the quoting process, right? ISO 200.2.2 doesn't have that. So we have to be able to figure out where we're going to stick into the process, etc. So you've got a variety of things like that, but that's the layer that we would change that at. The PPA adapter would change at that point in time. We then run through the system. We've got the TMS API, which is all about ingestion, all about getting in the right format, the data transformation. We then get into the routing. The routing deduplicates the whole thing so that we're more efficient. We're going to route that and feed that to the rules. The rules events are all going to fire. They fire using something called, we jokingly kind of called it the pachinko model. You never know where it was going to land. What that means is it takes on events and it fires them immediately. It is Mojaloop for anybody else, and it gets pulled back together at the topology processor. At that level, we then take the results, the rules. The topology processor basically sits there and says, I'm waiting for rule 1, 3, and 5 to figure or to run. So rule 1 is done, rule 3 is done, rule 5 is done. It doesn't matter the order. Once it's complete, it actually has an assessment. The summation occurs, and we'll make the evaluation. So in the aggregation layer is where we make the evaluations, and then it gets pushed off to the case management system. All right. You always need that piece of truth, and in particular that a human can deal with, and what that is JSON right now, until we get to the point where we make the decision support model. Let's see. I am going to probably skip this. I think people have seen this quite a bit for at least 2 years. So all the different models that we can be placed in, whether
I would ask you to give a brief overview, just 10 seconds on each, or 5 seconds even.
Sure. Okay.
Yeah.
All right. So, one of the things that we did at the very beginning, and this is something Justice was involved in, is Deloitte was hired to come up with topologies, how the system could work. Basically, they were evaluating the level one principle said that we need anti-fraud, right? So then the question was, what does it look like, and how does it operate? Yeah, so Deloitte was hired to come up with that, and what sits out of that is, they came up with these different models that you could run: distributed, embedded, semi-attached, and a managed service. What we mean by distributed is that there's no capability at the switch at all whatsoever. So the DFSP runs their own, right? Then we have embedded at the switch. The switch runs it all, right? So they go ahead and do this for all their DFSPs, all right? So it's very, very centralized. We have semi-attached where the switch is involved, but maybe the FRMS is still a separate entity, so it just happens to be run by the switch. So it's centralized. The DFSPs are all served as by this system, but the system sits outside. Or then as a managed service, where the FRMS, the TMS, and the fraud systems, if you will, are run as a separate entity. And then everybody serves. That separate entity serves a switch. It serves each individual DFSP. So basically, the models are you're on your own. We'll give it to you 100%. We'll give it to you 100%, but it's another organization that runs this thing, or we've got something for you. Run it if you'd like it, if you will, as a separate service is basically the way to look at this. That's kind of the high level summary of it. They're all involved in 2 different things. So one of the first things we do is we figure out an organization's financial flows, right? We then figure out where we're going to place an adapter in that flow, what makes the most sense to take information up, and then also to return information. And we figure that out. Then we also figure out the next thing is what's the operating model that you're going to operate in. Those are 2 critical things to us. What are the financial flows, and then what model will you operate in? And we're seeing, the model that Mojaloop wanted to operate in, or the one that Miller and team and everybody was most interested in, was the semi-attached model. Now we are running into situations where one of the things that's really nice about JOPEC that we determined that, to be honest, was a unintended consequence of kind of how their system of government runs. They are, in fact, they do have a king, if you will, but that means that this king dictates how a system will work. So they don't have as much GDPR. So that means that one of the things that goes through these transactions here is we always have to worry about the on-us transaction, because on the on-us transactions never left the organization, right? So how do we do fraud against that? Under that scenario, we can only do fraud if it's actually running at their location, right? JOPEC told us that they see every on-us transaction. So they have a payment system, but every single transaction flows through the central switch, no matter what. So they've got full visibility. BCAO is actually the same way. They don't have much in the way of regulation. They have minimal regulation right now. We're going to help them figure that more of that out. But we actually have we'll have a copy, which you don't normally have. We'll have a copy of all honest transactions. We'll have a copy of the CIF information. So what's the customer information file, things like that. We're always worried about entity recognition when it comes to this. You know, if it's pre-named, like it will be in this case, we'll know that I have bank account 1234 at bank XYZ. We will know that stuff. As it is right now, lots of times we don't know that stuff because the switch is relatively blind, right? And it's very blind when it comes to the honest transactions. So we're going to have to help these guys at BCAO write the new regulations that go along with how this is going to operate. That's actually a very fun, very involved, probably multi-year process that we're going to go through there. So I'm pretty excited about that. Did I explain that well enough, Paul?
Yeah, I guess it. Yeah.
Okay. So here's some statistics of why we're doing all this. All right. So we really like the data that comes out of the Global Anti-Scams Alliance. 25.5% of the global population has been defrauded to the tune of a little over $1 trillion. That is just astronomical. Until you start really thinking about these numbers, you have no idea. This is where it starts to really become important, though. All right. Worst hit by fraudsters was, in fact, Kenya, followed by Vietnam, Brazil, and Thailand. But Kenya lost nearly 4.5% of its GDP to scams. All right. So they've got M-Pesa. M-Pesa is running fast. They're in different countries. They're doing everything else. But what are they doing for scams? What are they doing to get that money back? That's a huge problem. If 4.5% of GDP is going out, imagine how that could be, turned towards the advantage of people and what we could be doing on inclusivity. And also, if you will, this, what we're doing kind of boils down to trust, right? So if we take the scams out of the system, we take that this person has a little bit of money and how do we convince them not to use that money, or how to convert the cash, if you will, into digital, right? So one of the things that goes along with that is trust, and they have to trust the system that they're going to join. So we are very much the forefront of that, where by getting the fraud out of the system, therefore someone will in fact trust the system that once they give you their hard-earned cash, that it's going to actually be there when they want it, right? If they get defrauded, all it takes is X number of people to get defrauded, and now they don't trust the system. So right now in Kenya, 4.5% of the people probably don't trust because they just flat out lost that money. That's a problem. So we're trying to go after that. The other thing that we discovered, which is something that you guys need to focus on, or in whole, is the pattern of re-victimization occurs or emerges, right? So what we mean by that is once busted, once somebody's got you fishing, you're probably going to do it again, right? And so they will go back and they will hit that person that they did a fraud against multiple times. All right. This is kind of a global phenomenon that we didn't realize. At the extreme end of the scale on the re-victimization chart, right, are in fact Kenyans and Nigerians. All right. So we really need to worry about that on the continent. So once somebody gets, in essence, becomes a victim of a scam at one level, they become that again. All right. 59% of respondents don't report. Right. So we don't know anything about it. We find out about it later. And that's what the regulators are working on with those analytics and stuff like that. but 59% of people don't report because, you know, if you report, I'm now a bank that just reported fraud. Fraud hit me badly. Am I still a bank? You know, or is there a run on the bank? We need to worry about those kind of things as well. Talk a little bit more about the statistics. You know, scams have increased by 150%. Employment fraud has been increasing. Impersonation is increasing 53%. Money mules increased by 44%.
Over
What does
what
that
period?
mean? Over a 1 year period, year over
Over a
year growth.
year. Right.
Yeah. Yeah, this is very good data. We're going to be we partnered with Gaza, and we'll be doing a formal partnership. I tried to get them actually some money from Gates, but Gaza has a very good reporting system already in place. The problem that they have is they actually even run a system that detects, if you will. So they have an online system that says this is a bad place to work with, but it goes at the domain level only, right? Fraudsters move their stuff around, so it does in fact catch some items and things like that. We'll probably make a rule that works along with there's stuff that says, and by the way, if you're on the Gaza list, then you're, you know, stop the transaction or block the transaction. But the reality is it's not very strong. So if we look at this 37% year over year growth, right, it's just huge as far as what fraud is doing right now. So all we can probably do is chip away at that. And by the way, a lot of these year over year numbers come from South Africa and are South African, but they tend to go across all of Africa or be pretty solid
Yeah.
in it. So and if we look at the reported losses, you know, for last year, 680 million was lost between in 22 versus a billion that was lost in 2023. So that's basically the difference right there. And what we're seeing the most as far as fraud is this type of fraud. We are in fact seeing application fraud, impersonation fraud, and scam fraud the most. So that's things like fake ID, identity theft, impersonation on the app side of things. So some basic phishing or things like that. Oh, I wanted to say, I want to go back to this one. Money mules increased 44%. What does that mean? All right, that means they're getting more sophisticated with getting the money. But the fact that it increased, the fraud had to increase as well. So it had to be there to begin with. You know, that's a funneling or a pipelining down to the money mule. So if we had, let's just say 100,000 transactions that are fraudulent, we're going to money mule that out. And it's probably going to be 3 or 4 people. And it creates a funnel for each person, and they're going to probably be about, they're going to be 4 people divided by 100, etc., to get rid of the money. So if we're seeing that one increase, we're in turn are seeing the fraud increase. We just don't we're either seeing it or we're not seeing it yet. So in other words, we can identify it or not. But that's a good indicator that fraud in general is on the increase. We've got the like I said, fake IDs, impersonation, you know, all these different scenarios, and then we've got lots of scams. The biggest thing that we see in scam, at least that I've seen personally, are the ones that deal with employment. You know, there's an awful lot going on with employment scams. Employment in various countries is weak. And so you get a lot of these texts that are about a new job, and they just seem obvious. At least I got them. But they're not obvious to test for people that need to work, you know,
They are
or
so common. They are so common. And
yeah.
we can't. So there's limited amounts that you can do about it in terms of fraud detection, apart from, I suppose, spotting the same payment pattern over multiple transactions.
Well,
But
that's
there's a definite part for financial education as well.
Well, that's what we do, Paul. If you think about it, what we're doing is we're looking for that pattern, right? We're looking for the way to see this, and we're looking for that bad behavior. And how do you get that pattern? Well, to be honest, that probably means that 5, 6, 7, 8, 9, 10, whatever, went through the system before
Yeah.
we had to create a rule to detect this, right? And so we look for the individual rules, and then we say, how do these rules work together to create a pattern or topology? And that's exactly what the system does. So the big difference is we're doing that in real time. So we're doing things like looking at history, looking at the entity. So on a scam, for example, we're going to look at are you have you sent money to this person before? Oh, a lot of people are sending money to this person, right?
Yeah.
This doesn't make sense. They're mule basically, right?
Yeah.
They're closing their account the next day, things like that. So we're looking at a variety of things along those lines. So we're looking at individual details that by themselves don't necessarily mean that much, but when we put them together, they do. And
Greg,
that's where
can I just say, people are starting to leave because we're over time. I know we
oh
started late. Can you wrap up in the next few minutes?
no, actually I want to go right to this slide right here.
Okay.
And then I'll wrap up. So I want to key in on this one that when we come down to the traditional risk focus areas, you've got your AML, you've got compliance, counterterrorism, finance, sanctions screens, you've got all these different things. We're all about fraud.
Mm.
So we're just doing fraud. We're trying to help you keep your money. Um, you know, we've got over 266 typologies that we've created. 92 are fraud, 174 money laundering that are in the system. We've got 31 typologies that we've made active right now for you out the box. 8 are fraud, 23 are money laundering. But it's a combination of things that really will help you when it comes to the investigation. Um, the difference between us and the other folks is we are real time. I mean, we're almost at the real time operating system level as far as speed and performance. We are going to activate and transact in a way that takes care of others. And I'll leave you with that. So we're actually all about protecting the individual. And we have, by the way, I am actually a Linux employee at the moment. So we moved to the Linux Foundation and became an official project. Yates is still predominantly funding us, but we do have others that we're talks to, if you will, and intend to broaden that. So we are a Linux project, but we focus on that, if you will. How to explain it? We're a Linux project, and we've got the benefit of being inside a big package of all these other open source products. So we have a lot of things that we can do, and hopefully we'll get a lot better. But the primary reason for going was the governance. That's what Linux does. It's not what Bill and Melinda Gates do. What they're good at doing is giving direction and money. So that's basically what we focused on. So that's it. That's what I got.
Okay. Wonderful. Thank you, Greg. I know we're really late. Has anyone got any short questions? Um, yes, Greg, will you share the slides with me afterwards?
Yeah, sure.
And I'll publish them to the group. Julie, you'll be able to get them off GitHub later today. Okay, thank you, Greg. That was a really good update. We really needed it. Thank you. The community needed it. So it's good to hear. And I'm sorry to cut you off now, but people are rushing off to other meetings. So
Sorry for being late. It's
that's okay. That's okay. Thank you, Greg.
all right.
And I hope to catch up with you again soon.
All
Thank you.
right.
Bye.
Thank you.